joined on this panel with Meredith Finn from Salesforce Ventures, Song Kim from Chegg, John Moser from Finalsite, and John Chen from Tal Education. They'll introduce themselves in a minute. Brief intro about myself. As I say, I'm an investment banker. I spent a lot of time in EdTech. Before being a banker, I was head of strategy and development for global education. And then I saw the light and turned to the dark side. After the introduction, we'll go into questions. Before the question, I'll ask the audience if there's anything they want to cover in particular with strategic deals, strategic investments, M&A in EdTech. We'll take that as a lead. Otherwise, we'll have questions and Q&A at the end. John, you want to start?
Sure. First off, I really love bankers. In all seriousness, my name's John Moser. I'm CEO and founder of Finalsite. I've been running Finalsite for 18 years now. I've been actually sold 3 times already. I've been owned by 2 different equity firms and really understand the premise of a growth business. Since 2004, we've been growing by 15 to 20% per year. And some of the questions we discussed today we were thinking about talking about was like, what's it like being $1 million company, a $10 million company? What are the barriers? So I have a lot of experience. Right now we have 170 employees in our company. We're in 80 countries around the world. Our primary business that we do is we are an educational SaaS-based product that focuses on independent and public schools worldwide. We help students engage in schools. We help them market their websites and bring that all together in one bundle.
Hi, I'm Meredith Finn. I'm with Salesforce Ventures. Salesforce Ventures is the strategic investment arm of Salesforce.com. We've been investing as a company for about 8 years now and have over 200 active companies in the enterprise SaaS space. Over the last year and a half, we have quietly and now publicly have been launching an impact investing fund. One of the 4 core areas of impact for us that's applicable to this audience is education and workforce development. And we have the opportunity to connect our portfolio companies and are looking for companies that have the opportunity to connect into Salesforce's K-12 and higher ed products. So our strategy is very focused on finding companies that have the ability to partner with us very closely from a product perspective. So we classify all of our deals as strategic and happy to answer any questions about raising capital from strategic partners.
Hi everyone, my name is Sung. I'm a director of strategy at Chegg. Primary responsibilities are twofold. One is to help the executive team map out and execute against our long-term strategic roadmap. The second is to run M&A operations for the company. Chegg is one of the leading kind of connected learning platforms, primarily addressing high school and college students. Have about 1.5 million subscribers on our model. Real kind of fundamentally, our philosophy is to promote self-guided, self-paced, on-demand learning solutions for students. So that they can learn where, how, and when they need to. And that's it.
Okay, my name is Joy Chen. I am the executive advisor for Tal. I'm not so sure if you've heard about my company. Actually, that's the leading K-12 education company in China. But we are listed here in New York Stock Exchange market. And according to the market cap, nowadays it's around $14 billion US. So according to this market cap, we are probably the largest education company, not only in China, but also globally. And my role is looking after the overseas business development and looking for the great opportunities for merger acquisition and investment. And my personal background, I've been in education industry for probably like 20 years. I started as the first group of people doing research in online learning, distance learning. That was way back in 1997. And later on, I was realizing the internet was not ready, infrastructure was not ready, so I decided to move to the industry. Year 2008, I started a company doing English language learning in China, in Beijing. And that company got acquired by TEL year 2015. And then I became the advisor for TEL, and I now live in US. Actually, I'm based in Silicon Valley, live in Palo Alto. So I'm so glad to be here because strategic investment is really what I'm doing these days.
Before we dive into questions, are there any topics from the audience regarding strategic investments? So maybe a question for all.
right.
Oh,
Go ahead, ma'am.
go ahead.
I'm Kaufman from the AIGA today. I wanted to know if you could elaborate on the issue of the impact investing field and how funds may be shifting. And then also from an investment perspective, how are you mapping to the sustainable development goals for education globally and national targets? Are you thinking about that?
Meredith, maybe because you have an impact fund, you want to take that?
Sure.
Thank you.
So, I think the impact space is certainly evolving. Our take on impact is less to invest, is to sort of like extend the sort of core Salesforce Ventures investment model to sort of our 4 core areas of impact around education, equality and inclusion, sustainability, and social sector tech. And so we're looking to invest in for-profit companies that have the potential for great venture-like financial returns, but that whose products have an emphasis in one of those 4 core areas. So we are not looking to make grants into nonprofits. We have a segment of Salesforce called the Salesforce Foundation, which is focused on sort of making those grants into nonprofit organizations that are undertaking activities in those areas. We are solely focused on investing in for-profit companies in those areas. And to your question on the sustainability goals, we are aligning our investments around those and trying to track our impact against those criteria.
Anybody else want to chime in on impact? So maybe one question relevant for all the panelists is there's always a debate about taking an investment from a strategic investor as opposed to a pure financial investor with one objective. Can you sort of walk us through the pros and cons and what to pay attention to? Joy, you want to take it first?
Oh, sure, yeah. I'm wearing the strategic investor's hat, so maybe I can start the answer by telling you guys a little bit about the benefits. So first of all, congratulations if you are catching the attention from strategic investors, which means they are the big player in your space. You must have done something great to catch their attention. And the first thing, they will give you a lot of help to help you with your business growth. So your business will grow at a faster speed, and they will provide you all kinds of support and help. They have the domain knowledge. They have the full house kind of people to support you from like product development side. Also, they can let you access to their channel, so you will have a great test about your product through their customer base. So all those things are very great. And another thing is maybe not for the companies at early stage, but a little bit later stage, you will have to think about your exit plan. So there will be a couple of options. You can go IPO, you can be merged or acquired. So acquisition is definitely one of them. So if you are taking the money from strategic investor, which paves the way for you for the future acquisition if things will be done in the right way. And also it gives you the opportunity to figure out, are they the person you want to get married with down the road? Because it gives you a long time to figure out how it is going to be working with them. Yeah. So, yeah. You guys?
Sure. So as a basic theme, if you're looking for investors and taking on capital, looking at capital as a commodity is essentially means you're paying a very high premium for that capital, right? So that capital needs to be deployed in a manner that, in a relationship that's truly valuable for the entrepreneurs or the founders or the team. And I think engaging with a strategic investor almost takes that to the next level, right? So in terms of pros, you're engaging with, essentially, as Joy referred to, one of the leaders in the industry, a deep bench of expertise in-house, and the ability to provide you not only with guidance, advice, services, but also channels for acquisition, and ways to enrich your product portfolio or your solution set. So in that sense, I think those are the pros. I think it's also a positive signal when a strategic shows interest, the reason being strategics have the same set of considerations as, let's say, independent investors. However, they also have their own opportunity costs to confront. And so they have to map those dollars against, well, what if we invested in ourselves? What if we invested in headcount and product engineering and UX? And for them to have gotten to the point where they say, no, actually, we want to develop a relationship with this outside party, I consider that to be a very positive signal. The one con that I'll call out is one I think that doesn't necessarily happen often, but is a big one to consider, which is the risk of becoming an orphan in the portfolio. You don't want to get yourself into a situation where you've taken a strategic investment, the investor has shifted strategic priorities and focus, and now the board member that's sitting on your board is disinterested in attending the meetings or providing the resources that he or she has available to furthering the progress of the asset. So again, haven't seen it too much, but when it does happen, it gets pretty ugly. So I would say that's something to be cautious about and to take a balanced approach to how you engage with strategics.
Yeah, completely agree with what's been said thus far. There's obviously, in the pro column, a lot that you can get from strategics in terms of, sort of product alignment with a big strategic partner, developing those deeper relationships with a deep strategic partner, leveraging that partner as a channel for sales and for customer introductions. On the M&A side, I think it's actually a mixed bag. I think it depends on the strategy of the investment team. So we actually don't invest with the intent to acquire and probably would not make acquisitions in the education space, given the structure of Salesforce's education products and where they live within salesforce.org. So, we're certainly not looking at things through an M&A lens. But obviously for certain partners, that is a priority. And so I think knowing that and assessing that going in is good. I agree with sort of the con side of you want to make sure that there's sort of true interest on the part of multiple people within the strategic partner, usually not just the ventures team. You want somebody from the product side or sort of other people within the organization who are also bought into that partnership so that you can see true value. Typically, if it's only the ventures team, they live sometimes very separately from the product organization and therefore will have limited ability to sort of impact that sort of more strategic partnership within the company. So I think making sure that you have deep relationships within the company beyond just the ventures program, which the ventures team should be helping you with as part of the investment, is pretty critical. I think another con is quite honestly, there's always the potential for competition in the future. And we've faced this with companies both within our core fund, not yet within our impact fund because it's so new. But it's hard for all companies and product teams to know necessarily where they'll be going in 4 to 5 to 10 years. And there is always that potential for competition, whether it's through acquiring one of your competitors or through sort of building their own products organically. So I think just something to be aware of. I think the benefit of having the investment to that con is typically if you develop a good relationship with the product team, you'll have foresight into those decisions and can sort of make the best decision for your company in terms of how you react to the entrant of that competitor in the market.
John, you were probably when you were selling yourself, you've seen strategics versus financial investors, and you probably had to weigh the pros and cons. And so can you talk from that perspective of being on the receiving end?
Yeah, I can. Before I get there, I just want to share, we've acquired a number of companies, so we're a strategic buyer. So if we look at it from that side, we looked for two types of companies we would invest in or buy. And one group was, we can acquire their client base and move them over to our platform. So we look at how can we put investment in and acquire what they have. The other investment would be, we're going to go look at buying products. We currently have 2,000 customers worldwide, and it would be great to add more vertical product to our list that our salespeople could go out and sell. So we would look at two different options. And I think if you're building a product or you have a company out there, the thing I'd really focus on is, when I'm looking at a strategic, what do they want to do with me? Do they want just my customers? Do they want our talent? Do they want to help us grow? And I think I want to echo what everyone says here. When you're acquired by a strategic, like we have Salesforce implemented within our company, we have structure, we have good commission pools, we have all those things that smaller companies don't have in place, and we can come in and go, here you go, let's focus on growing the business, and you don't have to worry about all this operational stuff. So I think you got to think about it that way. And then from our seat, Final Sight, we sold to Spectrum Equity back in 2000, and we had a number of strategic look at us. We felt equity investment instead of a strategic would be better in this case, so I could align my management team and all of us. I think alignment is the most important thing, making sure everyone's aligned. So I went with equity instead of strategic. And strategic they were not anting up as much as the equity at that point. And then we sold again, and we had, I think, 40 equity firms and 8 strategics look at us. And we ended up getting 26 offers, and 3 of them were strategic. So you kind of knew where we were going to land again there. But I think alignment is what I look at that's most important there.
Yeah. One thing I'll add, when I was at McGraw-Hill, I was also on the receiving end of the investment or acquisition proposals, and having like a smaller company being like very focused and aligned into one mission, not realizing that a lot of larger firms, they're not just one entity, but multiple entities with multiple going in multiple directions. And so, you think you're selling, you take an investment and everything's going to work exactly like planned. You realize that they're actually people that have different incentives, and it may take, months or years just to get the right meeting in place. And so the benefits are not as easy to grab once you're on the other side. And so just being mindful of that, and sometimes lowering the ask is in terms of what you want from them, is probably a better way of getting a good outcome, as opposed to just like, I want the moon and you have it, but you can't deliver it. So from there, so if there's one piece of advice for a startup in terms of how do you approach a strategic, what do you tell them? How do you make this work? Whether it's an investment or an acquisition, and maybe I'll go back to Joy for that.
So when we look into startup companies or companies that are looking for fundraising, we would like to see a couple of things. Number one is definitely the team. Do they have a great team of the founders? Do they have the expertise, and do they have the passion? Yes, you can have wonderful business ideas, business model, and go-to-market strategies, but all those need to be executed by a team. So that's number one. And because I'm here in US, I'm looking looking for the opportunities if they have not only relevance to my company, what we are doing, but also we want to see the companies we are going to do the M&A or investment here have the interest to go back to China. So if they show the interest, if that does not need to be right now, but down the road in the near future, then we would like to talk more with them, see if we can partner together through investment, partnership, or whatever kind of ways work together collaboratively. Yeah.
I can opine specifically on Chegg if that's what you'd like to hear. However, what I'd really like to mention is what I think are two kind of prerequisites for a successful relationship. And the first one is, as Meredith alluded to before, really align on the long-term view. There's a lot of value in making sure that the strategic is just as invested and has just as much faith in the vision that you've taken on, such that when things things turn south, the investor base is going to buckle down with you and work with you to prove out that thesis and to bring that vision to fruition. So that long-term view is really interesting because I think it, again, avoids kind of the cons that we talked about earlier. Secondly, be the best at what you do. So when Chegg engages in strategic relationships, we don't engage in it if we think we can do it better. And we don't necessarily engage in it if we think it's just a nice feature to have on our broader offering. Right? We expect you to be the best at what you do. You are not the B team, you're the A team. And we want you using your domain expertise and your experience to assert your knowledge and communicate your vision broadly to the team, and have the authority and the recognition to go out and make the right decisions. And I think that makes for a very, very valuable strategic element of the relationship, versus having to ask for permission or to seek the approval of others. I think that assertiveness is very valuable in a long-term strategic relationship and can help you achieve your own goals in line with what the strategic investor is hoping to achieve as well.
Yeah, I think one of the most important questions to sort of ask yourself when thinking about approaching a strategic, because we have a lot of companies that just come to us knowing the Salesforce Ventures brand, knowing sort of where we invest, but they don't think about why should I integrate with Salesforce? How should I integrate with Salesforce? But most importantly, are my customers asking me to integrate with Salesforce? You should be thinking about, from the earliest stages, what's best for your customers in your particular market. If you aren't seeing requests for integrations into certain products and platforms, it probably doesn't make sense for you to sort of take capital from those strategic partners, because we'll sort of fail on multiple levels. You won't want to expend the capital and human resources to build an integration with that product. It probably won't benefit you. So I think you need to think beyond just the investment amount and just the capital that's coming in, and really sort of ask yourself, where do I think it's most worthwhile for my customer base and where I'm looking to take this company from a directional perspective, to build strategic relationships and approach it like that, as opposed to approaching strategic investors just as another source of capital.
And I guess from my seat, I think the trick is, first off, how do you get to talk to the strategic investor, right? How do you even get the introduction? So I'm a big fan of LinkedIn, so it's really nice if you can get connected to the person you want to talk to through a reference. So someone came to me and said, hey, John, you should look at this company. They're doing some amazing things. So first off, how do you even get to the right person? So it's good to get introductions. I would much more talk to someone who, if I already knew him, they said, you need to talk to these people. I'd be like, that's not a waste of time. Secondly, if someone came to me and said, hey, I want you to invest in us, one thing I'd want to know is, I ask this even to my employees when they come in, they're like, I don't like the way this runs. And I'll say to them, how can we do it better then? Like, what's your idea? So I think, as we've kind of heard around the board here, it'd be great if you came in and said, I would love to be part of your company. I would like you to invest in us. So what's the benefit to me? What is it going to benefit the strategic? But then most importantly, if you have a client base or you're trying to get there, how are you going to, is this something through your NPS scores, your net promoter scores that are being asked of you. Like little stuff like that can really open the eyes of someone like myself to say, hey, let's do this, to actually getting the inquiry.
Thank you. I think we've got to wrap up. Any questions from the audience before we leave? Thank you.